Hi everyone. Today's going to be a quick video, but there are a couple of things to go over, starting off with First Republic getting a bunch of money, then we'll go over the economic calendar, then we'll go over the Fed interest rates, then we'll go over Max Payne, then we'll go over the charts, then we'll go over my very sad results and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with First Republic Bank here, you can see they got about $30 billion from a couple of different banks. You can see $5 billion apiece from basically all the biggest banks. Interestingly, it doesn't say any money came from the Fed, but they do have that Fed lending facility that they could take advantage of as well. But basically, they got a bunch of money and everyone's getting bailed out, and I don't think we should really worry about the bank problems anymore, at least until we find out any different. Basically, all the depositors are going to get money, and all the banks that are in trouble now are going to get money, and Silicon Valley Bank is screwed. Moving over to the economic calendar, you can see building permits were good. That's nice to see. Building permits month over month, also good. Jobless claims, less than expected. That's interesting. Generally, we want this to be a little higher than expectations right now. You can see initial jobless claims, also better than expectations. In this case, good news is bad news, so that's interesting. But right now, that means we're still not looking at that recessionary condition quite yet. And then the big highlight here for international, the ECB raised rates 50 basis points from 3 to 3.5. This was the expectation, so they did do it. They continued on their rate hiking schedule. And basically as a result of this, we're back to 25 basis points as the expectation for March. Speaking of Fed futures, you can see here, almost 74% chance that we're going to get 25 basis points once again. It was about 50-50 yesterday, and now we're about 75-25. Looking at the next hike, we're expected to get the pause, which was the expectation yesterday as well. And then moving to June here, they're still saying the most likely case is that we get a cut. So back to the current rate after we get the hike. In March, a pause in May, and then a cut here in June is still the schedule. I don't necessarily think we're going to get a cut, especially with how much money we're throwing at these banks to just keep them afloat. And like I said, the job market is still pretty strong. So I would expect this to become most likely to be a pause, which is in second place here. Moving over to Max Payne, you can see we're basically right at it, 396. That's where we stopped just about at the end of the day here, up about $10 on the day. Highest call strike, still 400. Highest put strike, still 390. And this is the witching week. So obviously the most amount of puts that we've seen in the market so far. Put to call ratio 1.85, still fairly elevated. Tons of puts here you can see. So looking at the strikes here, you can see 390. Don't expect to close below it. We got just above 394 as well. I don't necessarily think we're going to get above 400. Does make sense to stay in this trough. 399 is probably going to be your upper limit. 396 probably the lower limit in terms of the close. Obviously, we can swing above those levels in the intraday, but I would expect to close right in this range at the end of day tomorrow. And then looking at the cash, you can see here, huge skew to the call side. Market makers don't want to give up all this money, so we should expect a rally into the close tomorrow and a close higher than we are right now. Moving over to the charts, starting with the S&Ps on the daily chart. Big green day, not much to say. Came up to the VWAP, paused at that level. Would expect to get up to resistance here at 399.50. Expect to close at least above 396 based on the options. Probably not above 400, so about a 1 cent range above tomorrow. Maybe we see a little bit of a downswing and then a continuation back into that range. That would be interesting. But like I said, everything is bullish going into tomorrow's session. Moving over to the NASDAQ here, you can see same thesis, huge bull day. Took out the previous high, back into this previous range. Looks like we're going to get up here and retest 310. I don't know if that's tomorrow, but if we do get into this zone, looks like 310.50 will be resistance. Then we have to see how we push through that level or if we get rejection back down to this 341 level. Zooming out here to look at volume, you can see high volume is up here at about 315.60. So looking for a push up to that trend line at least. Then we'll see whether we break out above that level or not tomorrow. Moving over to the Russell and the Dow here. You can see the Russell still looks quite weak. We're still in this consolidation range. We are above the trend line, which is good to see. We did fill the gap as well. Got a little bit of rejection there. Looking for a push up to this 179 level. And then if we can get above that, then we're looking to 183. So that's interesting. Looking at the Dow here, similar thesis. Filled the gap. Big bullish day, still have this downtrend to contend with. If we get a continuation, then we're probably looking at 326 back into this previous low. That would be interesting. That would also correlate pretty closely with VWAP sitting at 327.50. So I expect the continuation, but just a little bit weaker version here on the Russell and the Dow. Moving over to Apple and Tesla. Apple looks more like the NASDAQ. Tesla looks more like the Russell. Looks like it can go higher, but does have strong resistance above. Apple just about taking out those highs, looking to push up to 161. Overall, both of these are bullish going into tomorrow's session. Moving over to transports here, this is pretty interesting. We got above the trend line on the 4-hour, just at that level here on the daily chart. Got a step down in momentum on the daily chart as well. Looks bullish. Looks like we're pushing to 227 at this previous low. That would be interesting. That also correlates with the 200 SMA here on the 4-hour chart and this area of higher volume right here at 228. So that makes the most sense for your upper price target right now, coming off of these oversold conditions. And then if we can clear those levels here on the daily chart, you can see there's a lot of room for upside here on this trend. So keep an eye on this. If this is truly a bottom and we get a pretty big surgence here, that could make some new highs going into the end of March and early April. Moving over to yields here on the daily chart, another wide-ranging bar, pretty interesting, but we continue to stay within this range. It seems like we're probably going to consolidate here at least until we get the 25 basis points in March. Then we'll see what happens if we go a little bit higher here. I would guess the 10-year will probably stay pretty stationary and probably same on the 2-year. I think the market is starting to look at those cuts realistically at the end of the year, or maybe even a little bit sooner based on the market conditions. So yields will probably stay here for the foreseeable future until we get a clear picture on the potentially upcoming recession. Moving over to high yields here on the daily chart in the 4-hour. High yields did rally. They did fill the gap. We did get up to that area of highest volume on the daily chart, so all of that is good. We tagged that 90-50 level that we talked about, tagged the 21 EMA here on the 4-hour chart. Now we're looking up to that 91 level and this most recent trend line. Certainly could see some rejection from there, especially off the velocity that we've had to get here over just a couple of days. But if we do break out above that level, then we're looking to probably the 55 EMA here on the daily chart, up around $92. That would be very strong, and we should expect that equities would be moving in that same direction. Really, we just want to see that confirmation here from high yields as we see the rally in the S&Ps and the NASDAQ. Moving over to the VIX just for a moment on the 12-hour and the daily chart, you can see we're coming down into an area of support potentially. I do expect this to break down, probably coming back down to at least 21 tomorrow. That'll give equities the room they need to rally and continue this downtrend here on the VIX. If we do come down further than that, you have to be looking at probably 1860 on the daily chart. That would be interesting. But like I said, 21 makes the most sense in the short term. And then after that, 1860 to 19 back at this previous low. I don't necessarily think we'll get that low. We might get a little bit of a bounce once we get down to this 2050 to 21 level, and then we'll see what happens after that next week. Moving over to my results, you can see I absolutely fumbled here again. Just couldn't seem to get my hands around the rally. Lots of chop in the middle of the day, so if you didn't catch that initial rally, it was actually a fairly choppy day, which was interesting. And also, I'm kind of transitioning in my lifestyle here to where I'm going to be swing trading a little bit more, so I'm going to be using the wheel method, looking for better entries and exit points here in the more medium term, just because of the way that I'm going to be watching the markets here in the future. I'm not going to be trading as short term just because I'm going to be busier during the day with other things. So the way that it is right now, you can see I have a covered call here on the IWM. I did roll this out to Monday here to collect a little bit more credit. So you can see a $3 credit, putting my break even up here at 176. Again, you can see this minus $109. That's not real. If we did close right here, this would go to zero. So not too bad here in my IWM position. And also this gives me tons of protection to the downside. My break even is all the way down at 170. So not a lot of upside potential, but definitely would be tough to lose money on this position for Monday. Similar thesis here on my 200 shares and my 301 calls here. I rolled these out multiple times. You can see I have a $5 credit here now. So my break even to the downside is all the way down at 296. Markets would have to move down pretty aggressively for me to lose money. And similarly, 306 is my upside limit. I'll continue to roll these calls up and out until we do see a little bit of a sell-off. Then I'll make a decision whether I want to hold these calls and protect myself more to the downside, or if I think we're just getting a short-term retrace and we're going to get a push higher. And then I do have some puts here to potentially enter another position. My idea here is that if I do get assigned on these, I'll look to enter some new shares, and I can have up to 400 shares in this individual account. I do have the capital available for that, so we'll see how it plays out. Everything is bullish right now, and we should maintain that until we see a significant turnaround in the short term. Let me know down in the comment section what you think of this bank situation. Are we just going to give money to everybody and it's all going to be fine? Or is something going to crack a little bit worse than it has already? Otherwise, what do you think of this rally? Is it sustainable? Can we continue this tomorrow and the next day? Otherwise, definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Getting pretty close to 1K subscribers, so I'd really appreciate that help. Otherwise, of course, this is not financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.